Good morning. Welcome to the Brew. I am your host, Lex. Today's Friday. We have Paulina with us and Molly. We are going to tackle the economic and stock market outlook for 2024. So let's get busy. Hello. Good morning, ladies. Happy Friday.
Guys.
How are you?
Good morning.
Cheers.
Doing great.
Good to see you, Paulina, as always. Thanks for coming on. So you've offered up the economic outlook of 2024. I get to look in Paulina's crystal ball. I love it.
Right.
Yes,
Right?
we're trying to predict the future today.
Okay, I like that.
All right.
Molly, you realize we're going to get to see tomorrow's newspaper today.
I know.
All the events. I wish
Right.
the market's not open, so no luck for me. Okay. Do you want to just get started, or how do you want to go, Paulina?
Yeah, 2023 is coming to a close and investors are already looking into 2024, right? So they can get a head start on how the economy might be performing, how the stock market might be shaping up. So we're not in the clear of a recession. Actually, there are many challenges that are facing the US economy and consumers. So I think it's important to dig into all of that and try to understand what headwinds are before us.
Okay. So this is always going to be, so here's the question I always get, and I'm not good at this. I will tell you that I don't do an outlook thing generally. Everyone asks, you said the recession, the R word. So will we have a recession? Do you have any feeling on that one to start off, Paulina?
Yeah, I think that's a good place to start off. And I think as we talk about a potential recession, we need to talk about the main player of the economy, and that is the Federal Reserve. Mm-hmm. And as we look out into the end of the year and into 2024, we have to continue paying attention to what comes out of the US central bank and even what central banks around the world are doing. But specifically, the Federal Reserve has been tightening its monetary policy, and that just means it's been increasing its interest rates in order to tame inflation. And that has a residual impact on the economy. It could slow the economy as a result. And that's obviously going to be top of mind for investors in the coming months. And as I mentioned, the Fed has been increasing interest rates to bring inflation closer to its 2% target. It has made a lot of progress on that front. But according to Fed officials, they've come out and said there's still a lot of work to do here. And that specifically, those comments could suggest that there may be another rate hike ahead. And if that's the case, then that's going to be pushing this higher for longer narrative for interest rates. And all of that is going to cause investors to probably remain cautious on stocks, particularly on the stocks that have high valuations. And that may even make them reduce exposure to some of those stocks into 2024. Okay. So that might be the case there.
Okay. So I'm trying to think. So the Fed is trying to get to 2% inflation. Is that right? Is that the number that we bandy about all the time?
That's the magic number. Yeah.
And where are we now? I should know this, but I don't. Are we at,
we're not quite there yet. It's at, close to 3-ish.
3-ish. Okay. Better than I thought. Okay. So do you have a feeling on interest rates though? You think they're going to ratchet it up one more time? Possibly.
It's possible. I think right now, looking into those predictive tools that the stock market looks at, it looks like they're not going to be raising rates at the next meeting, which is on December 13th. But there could be a possibility they raise in the beginning of next year, which is in January. But I looked at a JP Morgan report on their outlook on 2024, and analysts said that the Fed looks like it's pretty much done hiking. And if that happens, that could reduce bond yields that could influence bond yields to fall. And if bond yields fall, then that might compel investors to look at stocks for growth. So it depends who you ask really on their outlook on the Federal Reserve. I think some people think that the Fed has, with the latest pause of their interest rate in the last meeting, which just ended a week ago, it's possible that analysts might think that they've paused, but other people think that we might have higher interest rates ahead.
Do you guys feel, I mean, call me blonde, but do you feel like you're on a leash sometimes? Like when capitalism is just flowing too nicely, we're going to hike up rates. And when we're not shopping enough, we're going to just drop those rates. Do you feel like kind of like I'm being walked like the morning dog? I don't know.
I'm not going to say what came to my mind about that question. I swear I'm not going to say it, but go ahead. I'll let Paulina answer that. What do you
Sorry,
think?
I didn't understand what was the question.
Well, go ahead, Mal. Sorry.
Yeah, for any entity that can control the interest rates across all monetary crossroads, doesn't it feel like a bit of like a leash sometimes when capitalism is just going so well, they're going to tighten that leash, and when we're just not walking fast enough, they're going to like kick us in the butt to go shopping and lower those rates. What do you think, Paulina?
And I swear I won't say the word conspiracy here. I promise I won't say that. Okay.
I'm trying to regain my crown.
Go ahead.
Well,
Paulina,
I'm not sure if the economy theoretically, given the GDP reports and all the economic data, is pretty resilient, but I think that can be challenged. I don't know how strong the economy really is if we think about it, because right now it's being bolstered by consumer activity that accounts for 2/3, maybe even more, of economic growth. And the consumers, they're in a really tough spot. Their excess savings post-pandemic are virtually gone. Their inflation is still pretty high. We're in a higher interest rate environment that's making credit and debt more expensive. And you also have the reinstatement of the student loan repayments. So, I mean, holiday sales, surveys for what consumers are going to be spending for holiday gifts, it's expected that they're not going to be spending as much. They're going to reduce their spending. They're going to be really careful around where they put their dollars. They're going to be looking for deals and so forth. I think that's really telling as to how the health of the consumer is right now. So there's a lot of pressure there.
Yeah.
I wonder.
What
do you think, Lex? What do you think?
I mean, my outlook isn't a very good outlook because it's more qualitative, let's say, meaning, I'm a good shopper. I'm a good consumer. I spent the weekend with my son, who's in the process of buying a new car, right? So, he's going to have to finance it or lease it or something like that, right? Well, what comes into play with that sort of behavior? Interest rates, because I can go back in time and look at what interest rates were for a car loan or whatever you want to call it, a lease, and what they are now, and it's a significant difference, because of where interest rates have gone. It's not even a funny significant difference. It's a sad, makes you want to cry significant increase. I was looking at some car, and I won't get into the details there, but it was a couple $100 difference per month, or maybe even more.
Right.
Like, wow, that's a game changer for most people, right? That sort of thing. So, if we have that sort of headwind going forward, I at some point, I just think that something's going to have to give, right? Meaning the market or what have you, because quite frankly, I'm shocked that we are where we are in the market with what we've went through. And don't forget, we haven't even talked about a couple wars going on right now that could really escalate, especially the one in the Middle East. Yeah.
Right.
So that war, I think, could get nasty, potentially, which, now what, right? Although they do say wars are good for economies, I guess. But I don't know.
So you bring up a good point. So we're talking about Federal Reserve, as you say, Paulina. Well, Federal Reserve and rate hikes, we're talking about loaning money. So companies need capital. They've sourced that from normally debt. And so not only are you getting higher interest rates to borrowing to buy Lexus on a car, but you also get cost of goods sold, which is increasing on the back end. So it's interesting. If we're going to talk about rate hikes, we're talking about rates, which is mean, the car has an intrinsic value and then the interest on top. So where is that interest going, and who are we paying that interest to? And if they're loaning X amount of dollars, technically it's up to the people and the companies, et cetera, to come up with additional capital to pay interest on top of that intrinsic value. So technically we're trying to come up with more money that there is in existence. However, if you were to take away all the debt in the world, we would have no currency. So our currency is debt itself. So it's really important to start to understand how money is made. And I think what a great book to educate ourselves on is Creature of Jekyll Island by Griffith.
Are you
He's
endorsing
really good.
this book? Holy cow.
Really
You got a
good.
side hustle going here.
Yeah. And we've got a Web of Debt, which is also it'll blow your hair back. So that's a really neat. So when, and it's interesting, I heard lately a great trader that I love, we won't mention his name, Bobby. He was saying that, he focuses on the what versus the why, but I'm going to challenge you, Bobby, because if you know why they're doing things and why why Jekyll Island and Federal Reserve was created in the first place, you can kind of dip your toes into becoming an oracle, like you guys are saying in the beginning. So I'm going to challenge him on that. And if we get the context, then we can anticipate rate hikes, et cetera.
Yeah. Well, there's another thing I'm going to ask Paulina about here in terms of outlook for 2024. We have a big presidential election coming, right? So without getting red or blue, if you don't want to, what effects could that have on the stock market in 2024? Because I think this is going to be an interesting election. I think I just
want to point out, with red, white, and blue, she went with white right in between.
That's right.
So I'm feeling bipartisan over there.
That's
right.
Paulina? All right, Paulina, have at it. A presidential election. What are you thinking?
Well, we're a year away from the presidential election, and a year in politics can feel like a century. But as of now, polls are predicting that it could be another Biden versus Trump race. But like I said, a lot can change before that. So take this with a grain of salt. A major topic, though, I think that voters will be focused on, obviously, is going to be about the economy. This is a huge decision-making factor for so many voters, but it's important today more than ever because the wealth gap between the wealthy and the poor keeps on widening, and Americans are having trouble making ends meet. Wages are not rising at the same pace as inflation. Interest rates are painstakingly high. We all know the story. As it relates to the election and the stock market, specifically, JP Morgan, they looked at market performance going back to 1980 and found that the average stocks, on average, stocks have rallied in the year following an election. So while there might be some volatility that's expected heading into the elections, JP Morgan said stocks tend to rally as that uncertainty fades. So it's not too much of a headwind, the elections, when it comes to stock market performance.
Oh, interesting. Okay. I would have thought otherwise, but that's interesting.
Yeah.
I think I think we'll get some volatility, because we'll get polls that say this guy's ahead of that guy, vice versa, and you'll get movement there, but nothing, I don't think anything really too sustained, I don't think. The one comment I'd have about presidential elections, though, is I could be wrong about this, but my feeling is that all Americans vote their pocketbook at the end of the day, right? Now, everyone has social issues they care for. I get that. And they got...
and sorry to interrupt, I thought it was on who's better looking, how is their tie? No?
That's pretty good. I vote on that too. I do like that. Okay. No, but think about it. Everyone cares about their money, right? How am I going to pay my bills and live day
Right.
to day? Or, even better, I want to go on a vacation. I want to have the best environment. Hey, I got a little thumbs up. How did that happen? You see that?
You're getting a bunch. Paulina and I aren't getting any thumbs up.
I didn't get one of those. I stopped moving there. That must be a new feature that Max threw in there.
Right.
Yeah. So I just find people, when I talk to folks about elections, we get into the age-old debate about, conservative versus liberal and all that stuff. I'm like, okay, we'll argue that forever. You're never going to convince me otherwise. I'm never going to convince you otherwise. But where we have a common path is money. Always. That's an argument that people can have, whether they're, conservative or not, right? About where their money is being spent, or at least, how you can manage it. So I don't know. What do you think, Mal? Anything different from that?
I think there's a lot of people who might say, entitlements are also up there with their agendas of who they vote for. And that money does come from somewhere. It comes from tax dollars. So we need to always keep that in mind, because that does hit their pocketbook. Pocketbooks, help me, pocketbooks in the end. And so I do think that's when, I think there's some statistic where when food jumps to a certain threshold, that revolution starts. So when you go to buy your groceries and you can't get the normals, and you go to Home Depot and plywood's triple, then you start asking questions, what's going on. Otherwise, you put on cruise control, and the majority of people don't watch politics. But I think this next round, we have two wars on our plate. So it's going to be a lot of geopolitics. And one thing it's really interesting statistics you brought up, Paulina. It'd be interesting to know, how war affects the stock market. And I think there's always an initial dive when war breaks out, but then I think the Dow Jones, I've got something here that says the Dow Jones Industrial Average rose by 50% from 39 to 45, and by 43% from 65 to 73. And those were during, some crises. So that doesn't necessarily mean that's the case across the board, but geopolitics is going to be playing a big role. And so when you're looking at a president, what's been their track record? So we've got Trump has a track record, Biden has a track record, and what is going to cost our pocketbooks the majority of those funds, balancing with our responsibility as a world power to, make sure that people are looked after. And that same argument, are people looked after, so that then we can go look after everyone else, which I will get, massacred for even saying that. But the background of me is I took care of my mom, was sick for about 10 years. And so elder care became a really big portion, because in my own country, my mom didn't have enough to care for her. Luckily, we have a great husband. We work hard. It was fine. But that's an issue. So you want to balance all those pieces.
Right.
And
money.
Yeah.
Can you say it?
And
money.
Treasury bills,
Yep.
looking at that.
So would you say that all of us can answer this? Would you say you're mildly bullish for 2024, or bearish, or how do you feel about it, Paulina? Do you have a slate on this one? I don't know. What do you think?
When it comes to the economy, the stock market?
Yeah. I was thinking more of the stock market. But yeah, not necessarily.
Yeah, I think that there's going to be a catalyst for growth. I think they're going to be maybe a little bit harder to come by, because we are probably going to see that higher for longer interest rate environment, and that's going to put pressure on economic activity. It's going to put pressure on the consumer, which is carrying the economy right now. And so I think we might see that in corporate earnings, probably towards the middle to the end of the year. We'll see more of an impact. So I can't say whether I don't think I'm bullish, but I'm not bearish either. I think there might be something there, but I don't think it's going to be incredible growth.
Yeah, I think I probably feel the same way. That way. A lot of folks always ask me, well, what kind of position would you put on if you had, this sentiment or that sentiment? I'm like, getting around a stock market for an entire year, let's say all of 2024, if you ask me what I'm going to do, well, first of all, when I trade options, I don't think that way anyway. So that's an investing question, not a trading question, right? And I think we've covered it on this show before with Paulina. If you're in an investing situation as a young person, or even an older person for that matter, you're not in it for a day-to-day sort of situation. You're in it for a lifetime, right? So you can't look at any 1 year necessarily and say, hey, this is what I need to do. I'm going to take all my money out of the stock market and put in treasuries. Well, that may be really prescient and really a great idea if you could look into the crystal ball and be a market timer, but I don't think that's advisable either for over a long-term horizon. And I'm not talking about a year, I'm talking about a lifetime, right? So, yeah.
It's interesting that you bring that up. Look what's happening now with the yields just jumped to 5% on, and there's this really interesting thing from the 80s. There were bond vigilantes. It was a coined phrase. And so there was these guys who were just dumped, sold their bonds to increase supply and then increase interest rates, making it more difficult for the government, more expensive to borrow money. And so they were trying to slow down the spending, this frivolous spending of the government. And so we see a lot of bond interest rates are going up. We also see China over at BRICS. They are also unloading a lot of their bonds. And so are they bond vigilantes? Are they needing funds? Or what are they doing with that? So when you look at, what are they using that money from that sale for? They're buying a lot of gold. And that implies intrinsic value behind, they're proposing this digital gold-backed coin.
Mm-hmm.
But I always look here in the United States, and I think as people are starting to jump into trading, like everyone's getting in there, companies have that kind of gold backing because they have intrinsic value. So some of these companies have really good products, really good services that no matter what news sways people, that value is solid and it's in there. And so with value trading, sometimes people jump out of the market just because the news says, button down the hatches, there's going to be a market correction. Mm-hmm. So I don't know. I am more optimistic that the market's going to rally and people are going to step away and start to really study the companies themselves. I'm an optimist though.
Oh, I like it. So there's not one of us who's super negative though. That's good on the market. So I think that's pretty good. 3 of us. Wow. And we have an East Coaster, a West Coaster, and a Central Coaster.
Great. That's
that.
Yep. So we have
that's like
Paulina in white on the east, you in black on the west, and I'm gray, a mixture of the middle, right in the middle. Unbelievable.
That's like the double slit theory. I think we're really adding to the quantum field here. We're gonna just intend it, and it's gonna happen from free coast.
I love it. All right. Well, good. We're gonna let Paulina go. Paulina, thanks for coming on. Enjoy your weekend. I hope you always do. I think you do, because I know I do. So, and I know Molly does.
Yeah. Okay. Last question. Do I get a last question for Paulina?
It's got to be quick, though.
Okay, I'll be quick. Okay, Paulina, what's some advice you would give? You really are on the front lines there. What's some last minute tips you give some retail traders going into 2024?
That's a good question. Going into 2024, stick to your investing strategy, your trading strategy. Don't veer away from that. I think the retail investors who have conviction in what they believe in are the ones who are going to succeed.
Yep.
Ooh.
I like it.
Okay, so do not drink and trade. Drive straight on that same route. Okay.
Basically, yeah.
All right.
Okay.
Very good. Terrific. Paulina, thanks for coming on. We will talk to you next Friday from Napa Valley, mind you. So
exciting.
I'll be out in Napa. So
whoa, that's you, Lex. I live vicariously through Lex. I don't leave this little corner here.
All right, you have a great weekend, Paulina. Good to see you.
Thanks, Paulina.
Good to see you. Thank you. Bye-bye.
All right, good to see you.